Are we live? I think so. Should be, should be. Give me a while, give me a while. Let me quickly test the mic, make sure it's working. And then we start. What? Sorry, short while, short while. I think should be can, should be can. Okay, we start in like maybe just 30 seconds more or 1 minute. So I think today quite on time, we managed to kickstart. Because usually sometimes the stream, the software got issue, delay 5-10 minutes, delay here, delay there. Okay, mic check, final mic check when we start. Last mic check. Okay. Can, good to go. Okay. Let me check my software. Okay, I think today hair a little bit messy. But I think can. Forgive me. Just woke up like not long ago. Maybe not that long ago, so it's also not that short while ago. Maybe like 5, 6 like that. Okay, hey, welcome everyone. Let's start. Okay, so same thing. Our stream is Monday to Thursday, 9 p.m. Time zone is GMT +8. Okay, so by the way, if there's any questions throughout the session or the mic suddenly no sound, please let me know. Then I'll try to rectify and address your questions as well. So same thing, each stream only 1 hour. We keep it short and succinct, 1 hour, where we don't delay too much because everyone tired, want to sleep. Tomorrow must go work, some of us. So each stream always has 3 segments. First segment, we talk about the stock market, any particular stocks or market in general. Number 2 is the options component. And then usually during that time market opens, we will go in and identify opportunities, what are the options plan I have, any cash cover put I'm selling or any position I'm closing, all I will share with you all. Lastly is always the chit chat session whereby we just spend about 5 more minutes or 10 more minutes just to chit chat about local news or what's happening with our life and just minor updates here and there. By the way, if you are here in the previous stream, please feel free to say hello. And if I miss out any comment, please do repeat so I can look through, because I'm one person only, okay? I'm one person. People message me on TikTok, Instagram, YouTube. So I'm one person only. So if I miss out a comment, just let me know so I can look at it and then see and then reply to you. Okay, so let's go. Okay, let me just change the screen a bit because we have started. Okay, I put my face on top so we can start. By the way, hope everyone is doing well. I know it's Wednesday, but weekend coming, okay? Weekend is coming. Tomorrow, Thursday, then Friday, Saturday, Sunday. You all have a good rest. Remember we were streaming past few days, Monday, Tuesday. Everyone was like, Monday blues. Cannot. Long time to weekend, man. Cannot take it. So hopefully, after tomorrow is Thursday already. So fast. Then Friday, Saturday, Sunday, hopefully everyone can get some good rest. Okay, let me see. Hey, don't mind, I just do a final check to make sure sound okay. Okay, I think we are good to go. Okay, so today I really want to share with you all one of my thoughts is that, past few streams and my shorts video, I've been talking about market is getting harder and harder to crash for a prolonged period of time due to the way the speed of news is traveling and all the Fed intervention, government intervention. So nowadays my take is that stock market, if you want it to remain depressed for like last time, the lost decade, I think 2000 to 2010, so-called the lost decade US or something like that, I don't think it can happen anymore. But now the biggest question is, what will it take for the market to crash and remain depressed for a long period of time? What special event can really do that? Now that a lot of events can no longer achieve that, what are some really exceptional scenarios whereby the US market could potentially remain depressed for an extended period of time? So we want to try to understand this part. So hopefully it doesn't occur, but at least if we know what could be this kind of scenario that can cause this thing to happen, then we can better prepare ourselves. So just a quick recap. Nowadays, if you think about things like earnings collapse, credit crunch, or whatever, like housing bubble, last time there was property bubble, subprime crisis, all these things. Back in the days, people can buy condo property without having a job. Remember that was in the US. That led to the property crisis and the great sell down and depression. So imagine able to buy property without having a job, no source of income. Bank just loan you, loan and loan and loan. They assume, you somehow have a way to pay back in the future. So nowadays, all these things no longer can exist because of tighter and more stringent criteria, be it when it comes to credit lending, property selling or purchasing. There are very strict rules across the world nowadays. Singapore, US, Europe. If you don't demonstrate a certain level of financial capability, no banks will lend you money. Okay, no banks will lend you money to buy property or this thing. So the idea of over leveraging, bank over lending no longer occur. So there's also other things be like recession, suddenly a lot of people lost their jobs. Once again, if something like that occur, what will the government do? They will step in. They will start injecting money, and they can even manage the interest rate. Okay, if let's say economy not doing well, they just lower the interest rate by increasing borrowing, entice people to borrow more, spend more, then more money will circulate in the economy and try to bring back the lower and also called bring down the unemployment rate, which is mainly what Fed is doing. When there's a very how to say should I position that such a way that if there's any significant economy issue, they need to inject money into the economy to revitalize, bring back all the spending, money spending, jobs, all these things. They can manage it by interest rate. But interest rate is just one small element. They can do things like printing of money, QE. COVID is a good example. During COVID time, right, stock market crashed, literally crashed. The Fed just announced unlimited QE. The machine print so much money, inject so much liquidity into the market, flooded the whole system in money. So that's why a lot of scenario that happened in the past, like lost decade or even dot-com bubble, nowadays is harder to happen. And even if it happens, market won't remain depressed for an extended period of time. The past few years you have seen it. It lasts for a few months, then life goes back again. So even things like dot-com bubble nowadays are unlikely to occur. People must differentiate. Back then, dot-com bubble, and now maybe we can talk about AI bubble. Since now the tech in thing is AI, everyone is focused on AI. Back then, dot-com bubble is anybody, any businesses that has a dot-com website, people will invest. Magazines will say, hey, this new company has a dot-com website. Invest. That's what the newspaper in the past was saying. And these companies were not making any money. They literally just created a company and then they start announcing what IPO listed. Then they say they have a .com website, all this. People start thinking, oh, it's technology. Oh, it's the future. Everybody buy. So they buy companies even without earnings. But the time now is not similar. Okay, it's different. AI or should I say tech companies, this era, the tech companies like Apple, Microsoft, or even Amazon, they are making real money, real revenue. They are not just, oh, I create an empty shell and list online and then, oh, I have a .com website, you start investing in me. They are making real revenue and they have stood the test of time. Not just like suddenly pop up. They have been here for donkey years. So if you say things like .com bubble will happen again, AI bubble, I think very unlikely now. So now that I share with you all, the scenario and my belief that market is unlikely to crash and remain depressed for an extended period of time. So what scenario, if it ever occurs, can really get ourselves back to the lost decade? What scenario can really bring the market down so badly it remains suppressed for maybe a decade or even 20 years? So I give you my take. But personally, I think the day if something like that happen is when there is something like a nature disaster, non-man-made. So must understand the difference between man-made disaster versus non-man-made disaster. Man-made are things like what? War, tariff. All this can be stopped. Once again, you look back, it has proven. Iran war, tariff war. Trump just do some loosening, some adjustment here and there. Do some Straits of Hormuz discussion, negotiation, or relax the tariff a bit. Market climb back up again. So remember, man-made can be controlled can be managed, but non-man-made natural disaster is the one that is the big issue because it's unpredictable. People cannot manage, or people don't know how to manage. Example be like mega earthquake, tsunami, all this can be devastating. If those really occur at a very large scale, I think that's when the economy can crash and remain suppressed for a long period of time. Even COVID is a good example. You see, back then when COVID occurs, there's a lot of uncertainty. The key word is uncertainty. People don't know how to do with it. That's the cold hard truth. At the start, everyone was confused. What should we do? How should we manage? Any vaccine or not? Lockdown or no lockdown? China lockdown, other countries not locking down. So a lot of confusion and there are a lot of death. People are very scared. That's when market really sell down heavily. So things like all this natural, like not really man-made disaster, I think is one of the huge potential to really crash the market for a long period of time. Yes, I know COVID did eventually kind of resolve and the market went back up. But remember, that was when so-called a vaccine was found back then. Plus the combination of government QE, unlimited printing, plus the country, everyone knows roughly what to do to contain and manage COVID. Then the market slowly climbed back up. Initially, if let's say the scenario is, government print and print and print, but there's no cure to COVID, no vaccination, people don't know what to do. I personally think that they can print as much money as they want, market will still be depressed because people don't know what to do. There's a lot of uncertainty and fear. Will I die today? Will I die tomorrow? All this will influence people's decision, their behavior when it comes to market. They may no longer want to invest, they may just want to spend the money or enjoy their life or start hoarding the food. Like a lot of people, they go supermarket, hoard the food, hoard tissue paper, toilet paper, all these things. To the point nobody cares about the market. Everyone is more interested in basic needs, survival. So my take is, even with unlimited QE, government intervention, injecting unlimited liquidity into the economy, if it is a natural, non-man-made disaster and people don't know how to manage, that is when I think economy, market will sell down very heavily for a very long period of time. How much printing also cannot save the economy. That's my personal take. So overall, in totality, my take is market nowadays is getting more and more resilient, be it the speed of information, people are getting wealthier, the rich people mostly control the so-called stock market, most of their wealth are in the market, or so-called most market value are held by the rich people, government intervention. So nowadays stock market unlikely to remain depressed for a long period of time. Market can sell down, no problem, drop all these things, but to remain depressed for a long period of time, I think unlikely. Except one day there's a non-man-made disaster, not a war, not a tariff, maybe some tsunami or some new virus. That's where market can be in trouble. So personally, my take is that I will still remain bullish for now, okay, or at least trend sideways. I stick to what I said in the past few streams. I'm confident market will still at least trend sideways or slowly trend upwards. The day when there's a non-man-made disaster, example like COVID again, I can tell you upfront, I will definitely sell off some of my positions earlier to at least keep some cash out with me. So in case of any contingency or emergency. Especially you see I hold so many options contract. You know the last screen below. If market really deep for a long period of time, I better make sure I have enough cash to manage such a disaster or situation until a solution is found. But we don't know when. We are quite lucky COVID so-called a solution was found like in 1 year, 1.5 years like kind. We kind of know what to do after like 1 to 1.5 years. But if there's something that we need 3 to 5 years to figure out, and if you have so many option contract expiring, you can be in trouble. Okay, so hopefully I'm able to share with you all my thoughts on some of the contingency plan I have in mind when I'm doing this option view strategy, okay, and also my investment style. So I always talk about selling option, make money, but never really talk too much about a good contingency plan. So that's why personally, if such a day really occur, right, that's what I will do. Okay, that's it. So that's all for my sharing on this first part. Okay, I just want to share with you all because sometimes we talk about market being bullish, all these things. We also should talk about the potential downside. When will a bad scenario occur that could, capsize your portfolio? So have to be ready for that. Which is quite true, right? You look at all the man-made disasters, so-called man-made, like war, Straits of Hormuz, tariff war, all the war that is so-called caused by Trump or whoever. It can be reversed. It can be, like at first Trump was also very aggressive with tariff, right? He keep, 50%, 100%, Europe, you pay me 60%, tariff everybody. Then when market keeps selling down, what did he do? He start to relax a bit, start to negotiate more. Then market climb back up quickly. So you can see, must always differentiate man-made disaster versus non-man-made disaster. So that will give you a better idea how to prepare and when to prepare. Okay, any comments, please feel free to let me know before I move on to the second part, then the third part. And any questions, comments, just feel free to let me know, or disagreement, I can also learn from you all. Hey, Yaf, good to see you again, Yaf. Thank you so much for dropping by. Hey, how's your day, Yaf? Had dinner or not? Cai peng again. So a lot of us, some of us, in case you're not a Singapore citizen, in case you are from US or Brunei, someone from Brunei messaged me, or Malaysia. Cai peng is an economy rice dish. I think Malaysia also got sell, but in case you are from the States or what, it's just a plate of rice. Then you tell the store owner what dish you want to put on top. It is cheap, economical, and tastes pretty good actually. Okay, Yaf, I hope you had a great day. I hope work was fine for you. And like I said, everyone, weekend coming soon, okay? Hang on tight. I'm here with you all. So Thursday, tomorrow, Friday, Saturday, Sunday. Then you all have a good weekend and relax. Okay. So let me just see any other comments or questions before I move on to the next part. Hey, hi Fatty, nice to see you. Fatty bro, good to see you again. Hey, thanks for dropping by, Fatty. Happy to see you. Hey, by the way, if I miss any of your comment, please repeat, okay? Because sometimes it appears on the phone, sometimes it doesn't, and it appears on the screen in front. So let me know if I miss your comment. Hey, good to see you, Fatty, bro. Hope you are doing well also. Okay, next up, let me see. Okay, so in this case, let's just move on to the options component, okay? We try to keep the stream within 1 hour. Cause past few streams, I realized I keep stretching a bit, by 5-10 minutes. So I try my best, okay? I try my best to keep the stream within 1 hour. So I try to make it more concise nowadays. Because I think you all also want to go to bed, rest for tomorrow, right? Okay, change the view. I put my options on top, face below. Okay, so the second component of the stream is always about options. So in case you want to know, my first picture on top, first screen on top is all the options position I'm holding. So when market opens in 9 minutes time, we will once again go to the market, identify opportunities, share with you my plans, any trades I plan to make, open or close or sell new position. Then hopefully all of us can make money, okay? Hopefully. I drink some water, Okay, so today I just want to talk a bit more on the option selling part. So now we cover quite a bit of options concept, what I do, sharing with you my personal experience with option selling. Okay, so today I just want to tell you all just 3 key points. Okay, there's a lot of points to always talk about, but I keep it short. So when not to sell a cash cover put. Okay, we talk about all the cash cover put like what? Selling at 0.2 delta, 0.1 delta for better margins or for better safety margins, or we want to sell at 0.3 delta for better risk reward ratio even though it's higher risk level. All the different delta, IV, all this. So today let's talk about what are the situations or time we should avoid selling cash cover put. Not a financial advice, okay, not a hard and fast rule, it's just my personal experience. I share with you when are the times I tend to avoid selling cash cover put because of the various reasons like risk level, the risk reward, all these things. Okay, so the more biggest period I don't sell cash cover put is during or close to the earnings season. So earnings season are like a company announce results time. That's when the implied volatility is very high. So during this period, especially like 1 or 2 weeks before the earnings season, or even 1 day before, you realize the IB will spike up, implied volatility will spike up, and the premium suddenly become very juicy. I give you an example. If you sell it at normal times, let's say the strike price $100, delta is 0.2. Apple, let's say example, okay, let's say Apple. Normal times, maybe the premium you get like $10, example. But let's say 1 day before the earnings result, or maybe 1 week before, the same strike price, $100, 0.2 delta, all this, the premiums can from $10 jump to $20. Okay, it is very possible. During the earnings season, that time is when the premiums can really fluctuate up and down very quickly. So this is the period whereby I avoid selling any cash cover put. Don't be tempted by the high premiums. That is a trap. Really a trap, okay? If you keep chasing after all these high premiums, there will be a day your account will go bust, okay? It will go bust. So I give you an example. So let's say you sell, let's go back to Apple, okay? Always use Apple. Apple stock price is now $100. Example, $100. You sell a cash cover put, let's say $90, let's say $90. Wow, the premium very high, $10, okay, wow, very juicy. I sell one contract, the premium $10, so I get $1,000. So the next day is Apple earnings result. Apple announced terrible earnings. Anything can happen, I remember. Apple said that, their revenue dropped by 50%. Gone case, gone case. Suddenly, Apple stock from $100 dropped to $50. Now you have no choice but to buy the Apple stock at $90 because that is the strike price. You agree to buy at $90. You pay $90 for Apple share, but Apple share at the market is now valued at $50. You have lost $40 per share. Even that $10 premiums cannot cover your loss. Okay, cannot cover your loss. So situation like that, I always try to avoid and get myself out of it. I don't try to game the system, so-called try to predict that earnings result will be good. I don't do that. So my personal experience, personal, not financial advice, is I will always avoid this kind of earnings season. In fact, about 2 weeks before the earnings, I will either try to close some of the position, like previously I closed Nvidia because the profits are 40% good enough, and there's earnings season coming. I think Nvidia is next week, so I want to avoid that kind of risk if I can. So always remember, when you do all this option trading, the view strategy, always look at your total profit and loss, not just at the premiums. If the stock price drops so much, your premiums cannot save you, okay? Premiums cannot save you. So in short, earnings season, I avoid selling any cash cover put. Okay, cash cover put I avoid during earnings season, especially 1 to 2 weeks before. I will not touch it. Okay, so that's number one. And another point is when the stock is falling very aggressively. So I want to share with you, I think some of you all know, when the stock price goes down, the underlying option, the cash cover put option, the premium will go up. So I say that a lot of times, so I won't repeat. So usually this sort of scenario is when I like to sell cash cover put because I'm taking advantage of the slight drop in price and the better premiums. But if a stock is dropping aggressively, let's say 20%, don't be so quick to go and quickly sell a cash cover put. If it drop 1 to 2%, it's fine. It's probably things like profit taking or maybe a bit of a correction, that kind. But if a stock suddenly drop 20%, then you sell a cash cover put. Yeah, the premium is very high. But you need to ask yourself, why did the stock drop 20%? What is the reason? So remember, there's a big difference between a company dropping by 2-3% or even 5% versus 20% in one day. Something must have went wrong for a company to drop 20%. Either there's some maybe some scandal or some scams, or maybe some wrong accounting, or maybe the revenue suddenly dropped 50%. So when a stock, any particular stock, like example, I use mine, okay, Apple, Microsoft, Alphabet. If any of the companies suddenly drop 20-30%, I will straight away sell a cash cover put. I will go and investigate why and what exactly happened before I decide to sell any cash cover put. Remember, if a company drops so much suddenly, something must have went wrong. So please investigate, research first before you decide whether it is still a good stock to sell cash cover puts on. So this is why I just want to emphasize, if you want to sell this cash cover put consistently and keep making money, you have to put in some work. Example, if like me, you want to trade one DTE, or maybe not even one DTE, like 2 weekly DTE or even monthly DTE, do try to at least read up on the earnings report. You don't have to read in detail, all the specific number, deep dive. I don't think it's very fruitful. Just go and look at their revenue, their profit margin. You can go any like CNBC website, Google Finance, Yahoo Finance. They will have a report on some of the key points, like how much money they're making and all the forward guidance. It can be read in like just like 10-15 minutes. You don't have to go and dig out the whole report. I mean, if you have so much time to doom scroll, right? Scroll. I'm sure you can spare 10-15 minutes to read a quick earnings report by a few websites if your company is announcing any earnings result. And it's not every day, it's only mostly every quarter. Every 3 months, company announce result. Then you just need to spend like 10-15 minutes. This is important because if let's say your stock suddenly drops so much, at least you're ahead of the curve. That's why personally, if you want to sell options quite frequently, I mean, if you sell like a few times a year, then maybe not super crucial. But if you want to sell options well, you want to use the wheel strategy effectively, you do have to follow their every quarterly earnings result. I think this is a very crucial point because if let's say suddenly stock drop like 10%, then you sell a cash cover put without knowing the reason why, I think that's quite dangerous. Okay, like example, let's just use a quick example. Like Alphabet, I think a couple of weeks ago, right, they announced earnings, and then they say things like their cash flow is negative, all these things. So very concerning. But if you look at all the report, they did say that they have a backlog of 500 billion, and they are spending money, capex, not for their own entertainment, but to build infrastructure, to build more cloud space, computing power, to capture and meet this 500 billion demand. If you read the report and you see that, straight away you know you are confident to sell a cash cover put on Alphabet because they are spending money to capture all these demands, not to enrich themselves. So big difference. So when Alphabet at the time dropped like 5%, 7%, you have read the report, the earnings report, you will be confident that, hey, no problem, I will sell a cash cover put because company is still doing fine. They are going to capture more demand in the future. They're going to make more revenue. And that's why I'm confident to sell a cash cover put because the stock price has a good probability of going back up in the future. Whereas a stock just dropped 20% suddenly. You never read the report. You don't know what's going on. You sell a cash cover put. Very dangerous. Who knows, revenue dropped by 50% and you still sell cash cover put. gone case, okay, gone case. Okay, so just one last point, okay, last point when not to sell, let me see here. Okay, so we talk a lot about the micro factors. Let me just talk about the macro a bit. So I said before, when you want to sell option view, you want to utilize the view strategy very like in-depth, you should not just look at the micro, which is the company level, also at the macro level. So if there is some very significant new news, I repeat, new news or new event, new happenings. Why new? Okay, you look at past history once again, a couple of months during the Iran war or tariff war. Right? When something new happens, like tariff war, geopolitical risk, Iran war, markets suddenly sell down very heavily. So these are the times whereby I straight away avoid selling a cash cover put first. Because you know that any new event, news that are new, brand new, people usually very fearful, very uncertain because you don't know what will happen. So these are scenarios whereby I will avoid selling a cash cover put because the macro factor, the risk is a bit high. But if it's an old news, then I'm not so concerned. Once again, you look at the past few events. Iran war is old news. People are bought. Market has been trending upwards. Every now and then, close straight, open Straits of Hormuz, close, open, close Hormuz. I don't think investor bother anymore. The stock market has been trending up non-stop. Same goes for tariff war. At first, wow, very heated. Market dropped almost like 20-30%. Now you look at the market, there's new labor tariff war by Trump. Nobody cares. Market continue to trend upwards. SPY 750, 770. So any news event that is brand new, okay, brand new, I will avoid selling cash cover put because the macro factors can be something that really affect how your position go towards to. If it's stable, the direction will be in your favor, so likely your position will be profitable. But when there's macro news that could affect your position, like cause a huge sell down, then that can affect your position and turn it into a loss-making one instead of a profitable one. Okay, so these are the 3 scenarios that I avoid selling cash cover put. Earnings seasons, stock price drop too much and I don't know what's going on or not confident. And third one is any major new macro event, okay, new disaster, new news or new happenings in the world. So I hope this scenario sharing is helpful for you. For those who are already selling cash cover put or trying to embark on cash cover put. So you can see option selling has a lot of elements you need to consider. But as you do more and more, you get more experience. And hopefully my sharing helps you all in the decision making and helps you all to be not say be a better option trader, more like help you all to consider various factors when you all want to sell options. Okay, so that's all for my sharing for this part, and then we will move on to the stock market. Any comments, let me know. Any comments, let me know, or questions. We are moving on to the market right now because market has opened 9:35. I mean my local time, 9:35 p.m. Let me see. I see any questions or comments, then I try to address. Let me see. Best promo. Okay. Yeah, by the way, just on the highlight. I'm not sure if I check out my shorts video already. I've done in case anyone of you are interested, I've highlight because I recently did a Microsoft trade selling a cash cover put option. So I record the whole process, what buttons to click on my brokerage account. So if you are interested, you all can look at it. Hopefully it's a good guide for you all. I try to keep the video very short, like 1 minute plus. Hopefully it succeeds enough so it gives you an idea how to sell a cash cover put option. So I hope it is helpful. I know you requested for it as well. So hopefully, I hope the guide is okay. I try to edit, make sure it's very succinct, straight to the point. How to sell a cash cover put step by step using the Tiger Broker live, all live. And then what buttons to click. So if you have any question, or any one of you are not sure how to sell a cash cover put, what button to click, the entire process, can let me know. I try to answer your question. I hope the short video is helpful for y'all and can guide y'all, okay? I really hope so, okay? If it's not well done, y'all can feedback, okay? Hey, you, nice to see you, you. Hey, good to see you again. I'm doing fine, I'm doing fine. Oh, I hope you are doing fine also, are you? Glad to see you again. How's your day, you? How's your day? Are you still working or are you? If I'm not wrong, you are still working, right? Yeah, I hope day has been good for you, and I know, yeah, work is not easy, but hang on everyone, okay? Hang on everyone. Thursday is coming, which is tomorrow. Then after tomorrow, we got Friday, Saturday, Sunday. We can relax ourselves, okay? Okay. Yeah, so that's all my sharing on when not to sell a cash cover put. So something for y'all to consider if you are interested. And then yeah, like I said, I've done the whole process of what buttons to click to sell a cash cover put on my brokerage account live, and you can see the trade here. So it's recorded as a short. It's on TikTok, YouTube also, Instagram also. So y'all, depending on which platform y'all prefer, y'all can go check it out if y'all want. Okay. So now let's move on to the options now. Okay. So just for everyone knowledge, first screen is all the options position I'm holding, and the second screen is the stock market currently. So let's go in and see any opportunity for us to make some money. Okay. Yeah, one more, my computer laggy, laggy sia. Okay, let's see which one. Okay, Intel is down about 2%. SpaceX also down. AMD. Okay, Alphabet still trending down. Okay, so but personally, my take is I think because I hold too much Alphabet now, so I'm not adding. But I tell you upfront is if Alphabet were to dip to about $300, very likely I will add quite a bit of Alphabet. Okay, just to share with you my upcoming plans. So it's also really about risk management, you know. I mean, I'm quite tempted to buy more Alphabet, but I already hold a lot of Alphabet, a huge position. So I can't keep adding, if not, there will be imbalance on my portfolio. Because I always remind myself, I have this fixed rule, I cannot predict the future. Who knows, Alphabet don't do well in the next 5 years, I'm in trouble. So that's why I want to make sure my portfolio is balanced, is robust, the system I built can withstand all these scenarios. Okay, let's see what are the green ones, okay? Okay, let me just go back to the red one first. Okay, Nvidia down a bit. So honestly, I personally don't think there's any cash cover put position for me to initiate today. I don't think there's any good opportunity for me to sell any cash cover put today. Okay, but we see how I usually start trading only at the second or third hour. First hour too volatile, I will avoid it. Second, third hour, then I start trading. But at this juncture, I share with you my plan first. Unlikely I will initiate any cash cover put position. Okay, unlikely. Okay, let's look at the green one. Wow, good. iShares China stock going up. Let me see. Okay, in case y'all don't know, I own FXI, Tencent, Alibaba, MG. It's called MG, right? It's still MG. Okay, in short, I own all those China ETF and some of the China large cap stocks. I've been hoping the price can go up a bit more and I will cut loss. So I share with you first. Because now if I were to cut loss, it will be quite a heavy loss, okay? Quite a huge amount of loss. So I want to avoid that. So hopefully China stock can go up a bit more, then I will take a lesser loss. But it's still a loss, I admit it. I've learned my lesson. Don't keep averaging down. So you also can learn from me. I'm not sure if anyone of you hold China stocks. If you all do, please share with me what are your thoughts. Are you losing money or earning money? Because these China stocks I hold for quite a few years already. I think 3-5 years. It just could not recover. Just couldn't recover. So I kind of accept the fact if it can recover a bit more, I'm quite satisfied. I will take a loss. Okay, so I want to share with you all this. Where's the Apple? I cannot see Apple. Okay, never mind. I just changed the name, okay? Okay, so you can see Apple now went back to 311. Okay, in case you see the second screen. So I know I did share with you all my thought about Apple, that Apple still has room to drop. Okay, so this is a very classic example I want to share with you all, that nobody can predict the future, be it up or down, both direction. Okay, be it you're on the buying side or the selling side, or market Apple price move up or down. When Apple was about 305, drop from my 330, I just buy it because something like a 10% discount is good enough for me. My fear was that Apple will keep trending upwards and I can no longer buy. The fact that it has dropped to 305 to me is a discount from all-time high. I just faster buy. And now it's a good example. You see, it has went to 312 already. What happens if Apple keep trending upwards? I can never buy it, So I myself just quickly be decisive and buy it. Even though I acknowledge Apple is overvalued, okay? I think one of our friends here, Fatty, also shared with us his view that Apple is too overvalued, which I agree. And it's not as strong as compared to the other two stocks like Alphabet and Microsoft. But you just cannot predict the future. Really, you cannot. So based on my own situation, the rules I set for myself, the system I built, I don't mind getting more Apple shares because I want to balance out Apple, Microsoft and Alphabet to have equal percentage. So even though it's at 305, I just added in. Though at that point of time, I agree Apple is overvalued, Apple has huge potential room to drop even more. But I cannot predict the future, so I just buy 20 shares first. If it drops more, then I buy more. So this is a good example to really demonstrate that you cannot predict the future, okay? You cannot predict the future. Who knows, in 2 months time, Apple go to 350. You won't know, okay? Despite the recent earnings result, the forward guidance for Apple was quite weak actually. I think Tim Cook say revenue will drop by a few percentage actually. So all these are things that you all can consider when, be it not just option trading, be it like you want to buy and hold stocks. So just a reminder, this channel, though we talk a lot about options, our main focus is on option selling, but we also talk about buying and holding stocks, which is the first segment of the stream always. Because end of the day, this channel is not about options only or stocks only. It's all about making money, okay? The aim of this channel is for everyone to make money, okay? So whether you like to buy and hold, sell options, all are welcome, all are welcome. But the main emphasis is always option selling, view strategy, buy and hold, and also an ETF. Because I firmly believe in ETF, it's a very good tool for seasoned investor, beginner, anybody. Personally, my take, personal experience, okay, not financial advice, please remember, I'm just a bird. I speak bird language, not financial language. Anybody, any investor in this world, my take is that person should hold some ETF regardless. Why? Because no matter how confident you are in other stocks you have, like example, I'm so confident in Apple, Microsoft and Alphabet doing well in the long run, I still hold ETF because number one, the most important rule, I cannot predict the future. So if there's a day a huge percentage of my portfolio goes down, okay, maybe something bad happened to Apple or Microsoft, the ETF that I hold will be able to save me. Sectors in the market always rotating. This year maybe tech is hot. Next year maybe energy sector is hot. Maybe next year is consumer stocks. So because sector keeps rotating, the stocks you own may not be in that sector. But if you own ETF, you will get to benefit from all the sector as it rotates. And I believe for me, okay, even if let's say Alphabet next time crash by 50%, if you hold enough ETF over a long enough period of time, like 10, 20 years, the ETF, the gains it made can potentially cover the loss of my Alphabet. So that's why I firmly believe everyone, no matter beginner or seasoned, should have some form of ETF, like globally diversified one. IWDA, VWRA, whether you like Vanguard or BlackRock, or even straight I mean like SPY 500 also can. So that's my take. That's my take on ETF also. I won't speak further on ETF because I think all of you all know what is ETF. Yeah, so the way how we position our portfolio, personally, is always system. We always need to think from the system level. How your system you have created can withstand all the various situations. And contingency plan should be built into your system. It's like some of you maybe work in IT system or whatever lah, okay, security system, anything. You know there's always changing scenario. You need to account for this scenario that there is a high probability. Okay, no one can build perfect system. No one can do that. But at least build a system that has high probability. Be your portfolio system that can withstand most situations, except those extreme situations. I think that is good enough. So something for you to consider if you're thinking about ETF as a tool to supplement your portfolio. Okay, so we talk about Apple and then okay, let me see SPY. How much is SPY now? Sorry, give me a while. Let's see how is SPY doing. Okay, SPY 769, I think is very healthy. So today market I think is quite sideways, no major fluctuations. So I think probably may or may not have any opportunities tonight for me personally. But like I said, you don't have to trade every day to make money. Okay, don't have to trade every day. Sometimes, especially selling options, it's better not to sell. Okay, certain day when the markets are not favorable, based on the rules you set for yourself, then don't trade. It's okay. Okay, it's okay. Like I said, I will be on the market for another 2-3 hours. I see how. If there's some exciting thing, then I will trade all the way till like 4 a.m. local time. If by like 2-3 hours still don't have anything that I'm interested or any potential position I can open, then usually I'll just call it a day and then just take a rest. Okay, so let's just look at what are some potential position I can close. Okay, I share with you. No doubt I don't have any potential cash cover put now to sell, but I may have position I can close. So I share with you. Okay, let me see, make sure you all can see. First screen. We see the first screen. Okay, so my Nvidia put is still hovering at about 30+% profit. So I'll probably wait until 40+% before I close. Yes, I know the earnings seasons are here, but remember these contracts are long term, like next year expiry. So I'm more comfortable to hold over the earnings season. But if they can reach about 40-42% profit, I will still go for it and just close it to avoid the earnings season. So just to share with you all my thought process behind. Yes, I try to avoid earnings season, but if it doesn't hit my profit target, I don't mind holding it if it's a long-term contract. Okay, if it's a long-term contract. If example, my Nvidia, okay, I'll give you an example. Example, Nvidia will expire in 2 or 3 weeks time. Then even if it's only like 30% profit, 35% profit margin, I will still close it because the earnings season is coming very soon. I think like next week. And 3 weeks time the option will expire. If Nvidia report poor earnings result, this position from 30% profit can suddenly turn to negative 30%. So I will avoid that. So just to share with you all my thoughts behind. Okay, I flip the screen. Woo! So same thing, you see the second row, my SPY put. Not sure you all can see. Okay, can. So my SPY put I share with you. Okay, I shift the screen a bit to the left. Hopefully you all can see my profit margin. Okay, I shift my SPY put the whole thing to the left, the whole thing. So you can see the second SPY put that expire next year June is at 41% profit, about $2,000. It's $1,999.25, which is 41% profit. So that's why I said before, right, like past few streams. Personally, my take is selling SPY put that has a lower delta over a long period of time generally tends to work for me, tends to be profitable. Let me give you some explanation, okay? Not just through personal experience, Always remember, SPY is an ETF. Okay, 500 stocks inside. 500 companies inside. Generally based on inflation, normal people spending, price increase, generally company will price their products higher and higher. And that also means the company revenue should also slowly trend upwards. This is logic, logic, okay? That's common sense, okay? Every year you look at the products across not just the tech sector, not just Microsoft or Alphabet or whatever, even consumer products, medical products, food products. Every year, prices keep trending upwards slowly because of inflation, because of various reasons. I know printing of money, people want to have more salary, and then it's a circular effect, right? Cause and effect. If I want more money, I demand more money. Boss must pay me more money. Where does the boss get more money? Raise the prices of the goods. So other consumer will pay more for the goods. Boss got more money, can pay me higher salary. So it keeps going on, and there's various reasons. So imagine, look at the past historical trend as well. What happens to most good ETF? You look at all the good ETF, they only trend upwards. Okay, SPY, IWDA, VWRA, VWRD, what Vanguard, what iShares, all these things. ETF generally good. I repeat, good ETF, not those bad ETF. Okay, good ETF generally trend upwards over a long period of time. So when I sell a cash cover put on SPY, I have very good confidence. That's why sometimes I dare to sell like 0.2 delta, even 0.3 delta sometimes. But a good safety, I mean, if you are afraid that 0.3 delta are a bit high, then 0.2 delta or even 0.1 delta feels quite safe for me. So I hope I managed to share with you all my thought processes behind SPY put and why I think it is so profitable for me personally. Okay, personally, not financial advice, okay? But because one downside, okay, I want to acknowledge one downside of SPY put is the capital intensity. Okay, I want to acknowledge it. You see, example SPY put, you look at my 3 SPY put on the first picture, okay? So I shift the screen back again, I shift it, okay? Give me a while, This part I just want to explain a bit because I think you all could potentially benefit from this part. So just want to share with you my thought process of why I choose to sell SPY put. Okay, so I adjust back. Can see, okay. So you can see the first 3 row, okay, first 3 row, all the SPY put. The strike price, you look at the strike price, okay, 645, 640, 615. They are very expensive, very capital intensive. So example, let's look at the middle, second one, 640. Okay, 100 shares means what? You need $64,000 standby. 64K, in order to sell a SPY put. 3 SPY put add up is almost 200K already. So as compared to NVIDIA, you see, you look at the columns below further down, okay, you look at a highlighted NVIDIA put, okay, $130. Okay, then $120. See my mouse cursor there. Can see, okay, okay. So you see, the capital intensity, or should I say capital required, is very different. SPY put, no doubt, is very attractive. Personally, I think, it's one of the best stock or best ETF to sell cash cover put on. In fact, it's the best thing to sell cash cover put on, my personal take, because it's really very stable and has a much higher probability of expiring worthless, and you get to keep the profit. But the problem I just want to acknowledge is the capital intensity. You really need a lot of capital to sell SPY put. As compared to NVIDIA, you see, $130 only, which is, I set such a low strike price, which is like $13,000. So imagine, selling one SPY put is almost like selling 4 NVIDIA puts. Big difference, okay? So just want to share with you all some of the limitation of, if you are keen in doing SPY put, just bear in mind one of the downside is the intensity of the capital. So if you don't have that, it's okay, don't despair. Just keep building up your portfolio first until you reach a certain comfortable amount. Then you can start considering SPY put. So not a must to go for SPY put. There's many other stocks you can sell. Most importantly, you like the stock, you don't mind owning the stock, and the stock has good fundamentals, good prospect, then those are the rules that you can use when you want to decide which stock to sell options on. Okay, so that's all for the SPY put that I want to share, and then we will, any questions, let me know before we move on to the last segment, and then we call it a day, okay? Yeah, by the way, if anyone of you also sell SPY put, please share with me, okay? Please share with me. So you can see overall SPY put can be quite profitable. Like this $640, I sell the strike price, right? Over a long period of time, right? See, it's up 41%, 42%, $2,000 profit. So people may feel that 2,000 not say a lot of money, right? Since it's over such a long period of time. But remember, if you keep staggering all these options, 1 month, 2 months, 3 months, 1 year, a few contracts here and there, every month you have contract expiring, giving you the value, giving you opportunity to close. Like now, if I'm afraid that SPY can drop in the future, I can close it. I mean, it's 42% profit, it's not bad. $2,000 is still quite a decent amount of money if you keep compounding it, keep adding few hundred, few thousand here and there, add here, add there, add there. It can amount to quite a lot. So that's the whole idea of option view strategy. Multiple small wins that adds up to a big win. Okay, any questions, let me know before we move on to the last part, then I don't hold you all back. Okay. By the way, I hope it's useful, all this sharing. If not useful, just let me know. Okay, so I want to just share with you the last part. Okay, let's just move on to the last part, and then we can call it a day. Okay, just a quick chit chat session, and then hope work was okay for every one of you. Okay, I put my face on top. Okay, put my face on top. Okay, so today just want to have a quick 5 minutes, then we can close really. So I want to share with you, in case some of you all don't know, but I think most of you all know if you have watched some of my shorts video. I've retired for about 1 year plus. I'll probably make another video on what I've learned after retiring for 1 year. But I just want to share with you all is how much money do you really need to retire? So my OG goal, my original goal is 1 million. Because I think with a 1 million portfolio, diversified among everything, should be quite stable. But after I retire, I feel 1 million actually is not necessary, to be honest. It really boils down to how much is your liability or how much you need for yourself. Different people has different goals when it comes to spending during their retirement. Some people can get by with $1,000, $2,000. Cold hard truth. Some people will need $4,000, $5,000. So not everyone need 1 million, to be honest. Especially if you move to cheaper countries, let's say you're okay with relocating, or even go to different countries to stay for a few months, like Malaysia, Thailand, Vietnam. Their cost of living is significantly lower than Singapore. In Singapore, let's say example, you need $3,000 to live comfortably. You probably need only like 1.5K or even $2,000 to live very well in like Vietnam, Thailand, or Malaysia. Really. So I want to share with you my personal experience when it comes to retirement. I've tried various methods of spending to get by, okay? Like how I spend my money, how much do I withdraw, draw down how much every day. Is it the 4% rule, 5% rule, or whatever, 6% rule? So my take is, so far this system worked for me, I share with you. Every day I will spend 0.01% of my portfolio. Correct, 0.01%, okay, it's correct. So example, I have 1 million portfolio, okay? I'm lazy to track, withdraw down how much 4% or this, I'm quite lazy. So I just tell myself, very simple, every day I will only spend 0.01% of my portfolio. So if let's say I have 1 million portfolio, every day I will only spend $100. That's my average. So I just make sure I know, let's say I have some bigger purchases, then add up every month I get about $3,000 to spend. So that's my average. So this 0.01% rule works very well for me. because I don't have to calculate too much, think too much. Just spend $100 a day, so simple. Limit yourself. And honestly, honestly, I retire for 1 year. I most of the time cannot spend $100 a day. Even in this expensive country, Singapore, I can't hit more than 100 USD a day, really. By the way, 100 USD is about 130 Sing dollars, but we just use USD for comms. So 100 USD really more than enough to spend a day in Singapore. Most of the time, I maybe only spend like what 30 USD a day to buy some food, buy some drinks, sometimes entertain myself, that's all. Sometimes I don't even spend more than 20 USD. 30, 40 is like not always also. Sometimes maybe I just eat some like chicken rice, noodles, or eat salad, or eat Subway. It doesn't go more than $30 most of the time for 3 meals a day. Okay, so I just want to share with you this part is that if you are thinking of retirement or even want to achieve financial freedom, just remember the 1 million goal is not a fixed rule. It really depends on what is your spending style, what is your habit, what you want to go traveling every month, is it, that kind of stuff. Then you can decide how much you really need. And a good idea is consider the 0.01% rule a day, that you can spend 0.01% of your portfolio every day. So if you think through, if you calculate the whole year, 365 days, it's only 3.65%. So I know some people have this 4% rule, right? In fact, 3.65% a year in total is even lesser than a 4% rule, which gives you even more flexibility to grow your portfolio. So I have come to a scenario, a system that I built. Every year, I give you an example, okay? I can generate about 12 to 15%, but let's be more humble, okay? Let's just say 10% a year. Okay, even ETF, I don't do any options, all these things, just ETF. Most ETF like SPY 500 is about 10% a year already. So every year I only spend like 3.65%. So I have a remaining 3.35%, right? Yeah, 3.35%. Sorry, remaining is 6.35%. There is excess. So this 6.35% can go back to my portfolio and keep growing the money. So every year I spend 3.65%, remaining 6.35% goes back to my portfolio. So this 6.35% allows me to have contingency. If one day there's a medical emergency or big emergency, I need money, this excess money will help me, will cover me, because my portfolio keeps generating 10% a year. So I have this excess 6.35% that covers me. On top of that, if there's no disaster, no big issue, this 6.35% can go back to the stock portfolio and can keep generating returns. So this system that I've created for myself, okay, allows me to keep increasing my portfolio size overall. That means every year my drawdown will slowly increase more and more. It stays at 0.01%, okay, stay at 0.01%, but every year the amount that I get will be more and more. So I give you an example, like this year is 1 million. Maybe 5 years later, my portfolio increased to 1.1 million. Then I can draw more and more. 0.01% of 1.1 million is like $110. So instead of $100 2 years later, so maybe today I now draw $100 every day. Maybe 3 years later, I can draw $110 because my portfolio has went up to 1.1 million or 1.2 million. So just sharing with you my personal experience of retirement. By the way, if any of you retire, let me know as well. So just to share, this is the system I've created for myself after 1 year of trial and error. Okay, retirement is something really new for me. But of course, some of the viewers are saying, hey, you pigeon bro, you where got retire? Now you're doing option trading full time, eh? I mean, not wrong lah. I mean, so-called okay, I didn't retire and become a monk, okay, or do nothing, okay. I retired from my job to something else, okay. I retired from my previous corporate job to option trading full-time now, because I enjoy it actually, okay. This option trading full-time is a bit tiring, but I actually enjoy it, so I don't mind. Okay, but just to share, okay, my retirement, that I figured out that this system that I built works well for me. So if you are considering, you might want to think about this 0.01% spending a day based on your portfolio. Clean, clear, no need to overthink, and it's quite straightforward. 0.01%. Every day I can spend that amount. $100 USD per day. Just that amount. I don't exceed can already. Okay, hey, that's all. So I won't hold you all back. Hey, thank you so much for being here and for hearing out. Also, hopefully this last part is more of a chit chat session, share with you my own experience. And then, yeah, I mean, some of you all want to know more about the behind the scenes of not just retirement, about the life of a full-time options trader. So I'm quite busy nowadays, so if I have time, I will film some of the back end happenings, okay, like what I do on my daily basis as a full-time option trader. I share with you all of my thought processes, but some of the behind the scene, if you want to take a look, like my very simple desk, there's nothing on it, and I'm working to try to build a mini cafe here, a mini office work cafe here, whereby I have food, water, drinks that I can make easy to make. Not just instant noodle, it's very unhealthy. I try to do something healthier like salad that I can make myself, okay? Like I trade here, then I can cook my hot pot here. Trade halfway, then I cook some dumplings. Then I can get some coffee here. So I'm looking to set up a better workstation for me, because since I'm spending so much time here to trade full time, it's something I'm looking into. Okay, hey, that's all. Won't hold your back. Thank you so much. And let me see any comments. Okay, the rising cost can be crazy. Those retire. Well, you see then different stock. Yeah, I mean, I do agree. That's why I did say previous stream. I think Singapore cost of living is rising at an unsustainable rate, really unsustainable. And I have shared that I do have plans to relocate, to be honest, because especially my work, right? See, I just use a computer trade only. I can trade in any country, right? As long as there's a good Wi-Fi, good connection, and secure Wi-Fi, that kind, or secure data, I can just trade there. So if you retire right now, and if you don't have a good plan, really, that's why I shared this 0.01%, is that there's always contingency. Imagine if you plan in such a way that you get 10% per year, let's say ETF, 10% a year return, and your whole 10% is spent. I'll give you an example. Let's say you have a 300k portfolio, example 300k. Let's just say 300k, and 10% a year return is $30,000. So $30,000 a year return is like 2,000 plus, okay, about 2.8k per month. So let's just say 2.8k per month, and you spend all of it. You spend all of it to meet your basic needs. I think you are in trouble. Okay, with the escalating cost of living, your entire returns is being spent away. There's no contingency built in, no form of salary, no form of withdrawal that will increase to meet the inflation. I think that's a huge issue. That's why some people do a part-time, right? They do barista fire or whatever they call it. Work part-time, work for 5 hours, do Grab delivery to supplement their income. So yeah, inflation is something to consider. Do consider one. Relocate. Yeah, correct. Relocate to a good idea. Relocate doesn't mean you migrate. You just stay in other country for a few months, then move around. The cost of living is so low. Then Singapore, your house, if you have one, you can rent out for more income. So that's why really have to stay healthy, okay? I actually want to talk about health also. Some of my videos I talk about health being a very crucial factor when it comes to not just retirement, but for building wealth, okay? For building a strong, big portfolio and wealth, health is a very important element, super important. Not just a medical bill saving, but also giving you time. Got health means got time. Got time means your portfolio can grow. That one we will cover another time. Hey, thanks for your feedback. Thanks for the comments, Yaf. Thank you so much. Okay, we should end it here. I just want to say thank you everyone for dropping by. And please feel free to say hello so I can chit chat with you all. So, miss any comment, let me know. Okay, hey, thanks for dropping by, Fatty, Yaf, you. Very happy to see you all. For the rest, if you all lurking also try to say hello lah. No, I can chit chat with you all. Let me see. I just see if I miss out anything. Yeah, you. Okay. Thank you so much, everyone, for dropping by. Won't hold you all back. I see you all tomorrow. Same timing, 9 o'clock, 9 p.m. Time zone GMT plus 8. Hey, thank you so much, everyone, for dropping by. Thank you so much. Goodbye. Goodbye.